the beginner trading series where we break down Forex from the ground up. I'm Gana Danlami, the Analyst, and if you are new here, welcome to Believers Gang, where we believe that slow motion is better than no motion. So let's get into today's lesson. And if you're watching this video, it's a series where if you're a novice who doesn't know anything about trading, at the end of this series at least you should be able to place your first trade. With that being said, let's head on to our lessons for today. So our lessons for today, this is what I have lined up for us. And first up, we're gonna be asking, what is trading? Trading, as we all know, is the exchange of value between two parties, right? uh, if you are here in this video, maybe you would have bought something or might have sold something. In the presence of that happening, you would agree with me that trading has occurred, right? So that is trading. But then, what is forex trading? um Forex trading, before I get into that, trading, that's basically what trading is: exchange between one party to another of value. And in the traditional way that we all know it, the basic place that we all know where value is being exchanged is the market, right? A physical market, and these days we have the e-market online. And yeah, so we, for trading to take place, we have to have a buyer, we have to have a seller. So I gave you that example so you could come with that mindset. But these days, in this we are doing now, it's just that it's the same thing, but now we are trading different type of assets, and forex is one of them. We got the commodities market, we got the stock market, we got the indices, we got the crypto market. All these are together, and they are just different type of asset classes that are being traded in the market. And first off, the popular one that we all know is forex trading, but forex trading is just one part of the game. But forex trading right now is the exchange, fluctuation of price between two currencies, pairs of two different nations. Example, you might Great Britain and US dollar, which we all know as GBP USD. We got the euros paired with USD. We got Euro USD. We got the USD paired with the Chinese currency. We got the USD JPY. We got the Swiss franc paired with the USD, which we have USD CHF. So basically, forex is just two nations' currencies being paired together, and depending on what is happening and the trade happening between nations. You do know before today, trade do happen between nations. Example, I'm in Nigeria right now. Nigeria transacts with other African countries like Ghana, like Nairobi, like Tanzania. They do transact. So also on the global stage, we've got US transacting of different type of things like that. But then in this time, forex trading is just uh yeah, two countries um currencies being paired together, and the fluctuation between that price is what makes the market move up or down, depending on what is happening and which particular market has more strength than the other in that particular session and that particular trading time. I hope that makes sense to you. I'll show us example even as we go, because this we're doing is more of practical. It's something that you can see as we say, not go. So who trades forex? Major people that trade forex are banks, are institutions. Then we've got the retailers, which is me and you who trade in. We would like to call it small quantity, because the market is $1 trillion market where trillions of dollars are being traded and being exchanged in a day. But then major people that move the market, or major market participants, are banks, institutions, and retailers, as we see. These are the people that partake in the market, and retailers is me and you sitting in our homes, our phones, our tabs, our laptops, and trading with our own little capital. With that being said, we'll move on to currency pairs. Currency pairs are the ones I explained to you while trying to explain Forex market. An example is the GBP USD, Euro USD, USD CHF, USD JPY, and the likes. I'll show us example. But then Forex, like I told you, the trading world is wide. Forex is one side of things. Just know that it has to do with currency pairs, and it's the fluctuations between these that these prices are what we are trading. But then aside Forex, we've got the other asset classes. We've got the commodities market. Commodities market are example of them. You must have heard of XAUSD. You must have heard of SAGUSD. You must have heard of oil that you know. Oil, US oil, UK Brent oil, UK oil, US oil, gold, silver, and the likes are the examples of commodities. Then we got stocks. We got stocks like the Nasdaq 100. We got the S&P 500. We got the US 30. Those are examples of stocks. Indices are another asset classes, crypto as well. What do I mean by this? So on this platform I am, it's called Trading View. Trading View, this is the interface where we do as traders analyze the chart. As you can see, if I just go onto one side, this is where the chart is currently. And currently, example, as you can see, I'm on gold US dollar. So it means gold is being paired with the US dollar, and gold is being paired with the US dollar. So when you see the market coming down, it means the US dollar is gaining strength. And when you see the market going up, it means the gold is gaining strength. There is demand for it. These are real things happening in real life, real time. But then the representation of them, of those data, what we see here are the data of what is happening, and then traders like me and you use that data to make informed decision to either buy or sell. But then showing you, as by the way, this is the interface of Trading View. I'll show us more on that as we go. But then what you should be focused on is let's go. Let me show you some examples of assets that we do trade. So if I come here, example, you're gonna see, so we got stocks, we got the stock market. So you got Nvidia, Tesla, Apple, Microsoft, SpaceX, Meta, every company that you know that are publicly listed, you are most likely than not gonna see their stock here, and you can trade it from the comfort of your home. We got ETFs, they call them funds. I wouldn't want to go into that, but they are a type of asset class rather. We got futures. Futures are derivatives from other asset classes. So we got the MNQ, it's being derived from the Nasdaq. We got the NQ, it's still being derived from the Nasdaq, the stock. We got the S&P 500 is a future being traded from there. We got derivatives of futures from gold as well. So depending on what makes sense to you is what you trade. You see, it's a very big wide world. So Forex that you popularly known is just one asset class. You got Euro USD, you got GBP USD, you got USD JPY, GBP JPY, USD CHF, and the likes. There are so many different countries. You could find your country paired with another. So you just search for it. But then here are the so this is Forex. But then if you go, we got crypto, we got Bitcoin, we got Ethereum, we got, you see, there are different asset classes. So now depending on your area of interest, what interests you is where you come here and find you trade. We got indices. Under indices, we got the dollar index. This is what gives us information about the strength um, of the dollar. This is what represents the dollar. We could see that dollar is gaining strength for that particular day trading session or not. S&P 500 is the list of 500 US company that are publicly listed. We got the volatility, you know, we got the Nasdaq list of 100 tech companies in the US, and then you got them so on and so forth. These are indices. We got bonds, government bonds. You could see them different type of government bonds, from the US government bond, Japanese, Germany, France, India. You know, it's a very numerous one. So I want you to refer to this as trading. Not, if you say forex trading, is just one side of things. So you could see different type of economies, just come on. But this whole thing is just to give you idea. And then options, there are people that trade options, you know depending on how it makes sense to you, you just pick. And then we got the commodity market, where we got XAUSD and the likes. But then it doesn't, you could see, is a commodity. But then what are these guys that you are seeing here differently? These are brokers that like provide us with this information. Example, Rwanda, we got the CME, we got the New York, we got Binance, we got Bitstamp. These are just providers where we get to see this information from. And Binance, Coinbase, Bybit, Vantage are just different providers. And then under Forex, we got the Rwanda FXCM, Forex.com, FXCM is Forex.com basically, right? Because CMC market, Pepperson, IC markets. So these are just different type of brokers. If you know anything about them, you do. But then even without knowing, anything works. They work similar, but there are some little differences in timing. That's just a little difference here. As we go on, even in this series, you get familiar with this interface. So this is where you come to check. So under, for me personally, these are what I got listed. These are the assets that I have under my watch list, where I check. I usually, most of the trade, if you see that I trade, have to do with dollars. So that's why I got the DXY, so I could check the strength of dollar, so as to make informed decision. We got US oil, it has relationship with dollar. We got the XAUSD, it has relationship with dollar. Majorly I'm a commodities and stock trader. And then we got the S&P 500, we got the Nasdaq, we got the UK 100, then we got the SpaceX Elon Musk stock that just publicly IPO'd, because as of the day of recording this is 2026. So these are, for me personally, you would find your path as we go. So this is, I'll take a little while. So I've shown you guys what currency pairs are. I've shown you what commodities and indices are. But then let me take a little bit. So I think I'm going to do a separate video where I'm going to be showing you guys around TradingView. But then what you need to know, definition of what trading is, who are the market participants, and okay, trading sessions. What is trading session? So you see, in each of these things happening, we got different sessions happening. And trading sessions, we got 4 trading sessions or 5. First off, the day starts off with the Asian session. Asian session, under Asian, you should get your pen down, write this as I'm saying, then go forth to do further research on your own, because I could only do so much in this series. So trading sessions, we got first trading sessions. We got the Asian session, which consists of the Sydney, Tokyo, and Hong Kong session, which their timing, from where I am in Nigeria, this Asian session starts from market open around 11 p.m. till 6 a.m. Hong Kong session starts somewhere in between. Sydney starts in between. Tokyo starts in between. Then from 6 a.m. 7 a.m. London session starts till 4 p.m. And whilst there, by 2:30 p.m. Nigerian time, Central African time, 2:30 p.m. the New York session starts till 9 p.m. So you'll see that over the 24 hours, this is how these sessions keep switching. So what is these sessions? And how does trading session apply? So you're not just gonna what happens is these trading sessions, right, are times. Let me give you a literal example. Where you are in your location, you have market days. There are specific day designated for specific type of market. Maybe in your location it might be every Saturday. Those are the market days. Maybe in your place it might be Sunday, Wednesday, depending on the way it is. But then local market that where you get to buy your local commodities. If you go on usual days, you see less traffic in the market. You see people, but then it's limited. But on the specific designated market days, when you tend to see volume of people and a whole lot of transaction going on. That's the same thing here. Trading sessions, market open and closes. We usually experience very high volume where people are present in the markets and trading like actively, and that volume is what's needed to move the market. And example, if you are trading USD related pair, you would like to position yourself in New York sessions, because New York session Central African time starts 2:30 p.m. but in the US that's 9:30 a.m. That's when the market in New York Stock Exchange opens. For the London sessions are open 7 a.m. Central African time. In London, that should be around, I think, 8, I don't know, 8 a.m. for them, right? And in this particular trading session, you find people in the London Stock Exchange actively trading in that particular period. So you tend to see volume. And then if it's London session, you should be looking at pairs like Euro, like the GBP. That way it doesn't mean, but there's high probability at that particular period of time, that particular pair, you know, it's more favorable for it in that market. So depending on the assets you're trading, well, there are some other assets like crypto. They are no they run 24 hours, so they are not really reliant on any particular stock exchange. But then still, during these periods are where you experience high volume. Why would you want to position for this high volume? You don't want to enter a trade and then the market is lagging and lagging and lagging. On that point, you would want, especially if you're a day trader who trades um what is day what who is a day trader? Okay, we're going to cover types of traders, but then I'm speaking about trading sessions. So this trading session helps to give you volume, and then you get to trade and finish your transaction within that period, and that's what you want. So what are the type of traders we have? We got the day traders, we got the swing traders. Day traders are those who trade and finish their trade within that day. They don't hold trades overnight until the next day. Those are who we refer to as day trader, which would most likely be me and you. But then even in the retail traders, that's where we find day traders and swing traders. Swing traders are people who tend to hold trades. They enter for a little bit longer period of time, sometimes even warranting them to hold the trade up until the next day, right? And then those are who we call the swing trader. Maybe even for weeks they do hold trades. Those are swing traders, more of long-term traders. Swing traders are institutions. When you go to swing traders and you're referring to institutions and banks, these guys hold trades for months, for years. So depending on you, me and you, who are most likely gonna be retail traders, we tend to trade um, on that particular day and finish our transactions, right? And then let me show you something how you would mean. And depending on the type of trader I mean is what will determine the time frame you would be using. What do I mean by time frame? Time frame are these things you see right here. Time frame are the period it takes for each of these candlestick we are seeing on the chart to form. Like example, I'm on the 1 hour. Let me start from big. We got the monthly, but I want to start from weekly. So example, um, under weekly time frame, it takes each of these candle you are seeing, it takes a week to form. 1 week, 1 week, 1 week, 1 week, 1 week, right? This is what we call, like for this week, today is Tuesday, the market is still forming. So this candle hasn't closed yet. Are you with me? So if we go to daily time frame, what that means simply, it means each of these candle takes a day. It's after 24 hours, this one forms. Another 24 hours, this one forms. Another 24 hours, this one forms. So this time frame, we use it bigger time frames to get direction for the market. But some people that use it to trade are the swing traders. So they look at things from daily perspective. They are not worried about the what happens intraday. Then if we go lower, go to 4 hour time frame, you know, under 4 hour time frame, um, that's where, just like the same concept I give, it's after 4 hours, 4 hours, 4 hours that we have these candles forming after every 4 hours. So also apply to 1 hour, so also apply to 30 minutes, every 30 minutes, where this candle forms, and also 15 minutes. So why I showed you this is to show you, as day traders, we use 15 minutes for our entries. Some people go low as 5 minutes to, trade, find entries from there. You see this 1 minute. Notice something, the lower we go to the time frame, the more many or more frequent these candles occur. Example for this is the 1 minute. So this happens every 1 minute, and that's why you're seeing them many like this. And as we go, this 1 minute for time frame is what forms this 5 minutes. This five minutes forms 15 up until weekly, right? So I just thought to let you know that. So for people who are swing traders, you find them using from lowest time frame from like 1 hour, making their decision of based off 1 hour, 4 hour daily, up until weekly, depending on the type of swing traders they are. That's about time frame. I didn't include it here, it just came as we were going, but then write it somewhere there. You can come back to this video to refresh your memory. So how do traders actually make money in the chart? Traders, for us to be able, trading view here is just for analysis. We do not take trades here, and we do trades in a platform called MT5. And for you to be able to trade, to be able to place a buy or sell order, we have people who we call brokers. Brokers, example of them, we got Xness, we got Access Market, we got FXCM, we got Hot Forex Market, we got HFM, we got FBS brokers. Who are these brokers? These brokers are liquidity providers. What is liquidity? Liquidity in this context, liquidity is why, but liquidity in this context means money, leverage we have to be able to trade, and the people that provide us these are the brokers. Because without liquidity, without money, without leverage, we can't place anything here, because what we see here happening is a whole lot of transaction from the big guys, the banks, the institutions. So brokers give us that leverage when we have an account with them, to be able to, when we fund our account, they kind of like, the representation of that, there is some sort of leverage being added to either that $100, that $50. That leverage they give us is what makes us to be able to transact with $100, $200, $300, as the case may be, that you use to fund your account, right? I hope you're following me. And then, how do we make your money in the market? We make money in the market when we fund our account with any of these brokers, and then that's what gives us the ability to be able to place buy or trade. And when we make profit of that, we are able to withdraw from the profits we make. You feel me? That's how traders make money. And Now, that's the technical side of things. But then, how traders make money is by buying. When they buy, you are expecting market to, example, when you buy from an example at this point, market going up from this point, you're already making profit. So if you bought at this point, you are hoping, if you, example, let me give you an example. If you are a real estate guy and you maybe buy a land, maybe now you are buying it for investment, not to build. You are buying it with the hope that the value of that land would appreciate and at a later time you would sell for profit. So if you are a phone dealer, maybe you buy for this particular price, you add your profit, you allow it to sell. But the best example for this is the land or property you buy with the hope that the value of that property increases and you sell. That's the same concept here. You buy here at this particular time with the hope that at a later hour it increases in value and you make profits. This is it. And also when you do sell, because those are the two things market. Example, when you sell from this point, you're expecting that the value of dollar will gain strength over the example US dollar over, it could be anything paired together. So example, if I want to use GBP USD, Euro USD, um, just take USD is the red ones. Gold demand is the one represented on the green side, and you are hoping that this particular USD is going to have strength over um, gold, and that way you sell from here, you are hoping it comes here. But what happens if you sell from here and it start going up, you are losing. And if you maybe buy from here and it starts going up, going down, you are losing at that point. I hope that makes sense. And that's how money is being made in the market. Why? Because these representations you see right here are the price, current price where market is. Like as of the day of recording, gold is at $4,075 per ounce. That's what this means. So from where it is now, you might be speculating the market from here maybe it's at a resistance. You might sell with the hope that here, you see all these things have happened, but from where it is right now, where is the market going? You don't know. But this way now, other things we are going to be covering is going to help you decide to, from this point, either buy or sell. I'm just using this particular gold as example. We've got other pairs like Euro USD, is still the same concept across all the asset classes I showed you, and that's how you make money, buying and selling. And take profit means when a price maybe from this point you are expecting, you were targeting this particular high, you said if price gets to this particular price point, you bought at this particular price point, 4002, you are saying at 4026, when it reach, you are going to take your profit, and when it reach, it automatically does that for you if you set that take profit. And there's what we call stop loss. Stop loss meaning when it gets to this particular price, it should limit your losses, because in your account is not the entire thing you're using to trade. So we'll treat that when we get to risk management. You're only using a fraction of your main balance to trade, to speculate of price either going up or down. And that's how you make money from the market. If you make profit, then you can withdraw depending on the broker you use, and then it gets reflected to your bank account. That's how people make money. So right now, your homework is to install TradingView and start observing the chart. But then before we do that, what this is the interface of TradingView. This is the watch list where the pairs you do add. So example, if I want to add a symbol, I'll come here. Maybe I want to add Euro USD right now. I'll just press this plus button. It has been added to my watch list. And when I go back to my watch list, you see it being added. And if I want to check it, I'll click it. If I want to check, I come here and press the full chart. It brings me up onto Euro USD. And this is what is happening between the Euro and US dollar. Currently, if you see coming down, just like I told you, this one here, US dollar is gaining strength over this guy. But at this point, when this guy was going up, USD was losing strength between this. So just look at it like if you see any PS, they are like in a battle. So depending on what that economy is producing at that particular point is what we give value to their currency to make it more powerful than the other currency that it was paired. So that is how it is being done. So if you want to check all your watch list, here is for the watch list. And if you want to check your chart, here is the chart. And also if you want to explore other people's idea and what they're doing, this is the explore button where you get to see summary of like what is happening. Also, TradingView is an amazing software. We got communities where you could share your trade ideas with other people in the community. This is just idea section. You too could share your own. And if you want more ideas, you could come check other people's idea, make friends, just like you would on social media, right? The other traders. Then we got the menu section. This is it. So you set up an account with them with your Google. So we got the settings. Like for me, example, this is me. This is my profile, right? If I come here, this is my profile. This is where I share my trade ideas. I also share my trade ideas with the community, what I see in the market. So example, the one I shared some hours ago, I shared a trade idea on XAUSD with the community, and then price was at 40.48, and I was speculating that the price would go up. Why? Because of analysis I did. And then if I go lower, you would see they would require you to explain why and what you saw that is making you do. I explained what I was seeing and why I was selling. And you could see someone connected. You could leave comments. So this is just the social part of TradingView, right? So, but majorly those are just by the way. All you need it for is just to do your analysis. Then you go on MetaTrader 5, MetaTrader 4, as the case may be, and place your trades. So that's just the use of TradingView. We don't place our trades here, we just use this. But then you could also use your MT5, MT4 to analyze the chart as you deem fit. So your action points, because we're gonna be, as I'm speaking, at the end of each session in this series, you're gonna be practicing. So if you reach up until this point in this video, just go to your Play Store. If it's in your system, go search online TradingView, download it, open an account with them, and come get familiar with this place, get familiar with these assets. Just get familiar with the chart before our next session. So that's your assignment. Just pick a pair, just get familiar with the interface for now. Based on what we show you there, anything you don't understand, just come back to the video and do. And on the next lesson, we're going to be taking it a step further. But basically, this session is just to give you a context of what trading is, what forex trading is, and commodities, stocks, indices, why they play, how to make markets, and some other more things which I forgot to write, but we'll cover as we are here. Time frame, yeah. So see you on the next session, and remain blessed.